Hello guys, good evening. We're gonna do the market close update. We had a reading of 4% on the unemployment rate today. We covered that with a live stream. That's 1 point less than the 4.1, and therefore that means that unemployment is interpreted as possibly under control and reducing, and that is something that people think of. Possibly the cut in the rates is not necessarily gonna be needed at the moment because unemployment is not a problem, it's under control. That's why positive news on this can be interpreted as negative news, and that's why we saw the breakout on the 4 hour during the stream getting sold out. At the same time, we have confirmation of that because the Federal Reserve balance sheet had a new reading that was on Monday confirmed. The previous one was selling, and this one is also selling. We still haven't taken the lows of 309 trillion. What we want is to produce a higher low in this area, so we can confirm that we are in a channel to the upside. That is potential liquidity coming in, and definitely if we want to get into quantitative easing, we need to see the balance sheet going up as opposed to going down. So after seeing this double bottom, I'm really keen to see higher lows in this area, but with the new candle again going down, that is looking like less likely. The hash ribbons, a signal of capitulation that we have earlier this week. At the moment, the moving average is still open, but it's very close to produce a bullish cross, which could be something really positive. If you go back in time and we look at the previous hash ribbon cross in this area, which indicates that the miners enter an area of stress, they start reducing the hash rate, and that typically comes with some drawdown in the price. And during the whole period that you have this bearish cross, you get all the signals in the hash ribbons indicator. Eventually you start seeing the green signals right after the bullish cross, and at some point the technicals align with the hash rate expectations and you get the buy signal. At that point you can expect upside. That wasn't necessarily the case 2 signals ago, where we had the signal at 67 and we still went to 49. That was an unprecedented bad performance for the hash ribbons. Indeed, in history is rarely that you get a buy signal and you go lower. This was probably one of the only times that we did that in July 2024. The next one, it went massively up, like 80%, and at the moment we're very close to the bullish cross. Just understand that the bullish cross doesn't coincide with the buy. The buy can come a few days after. So we are looking forward to that signal today. I'm very happy today. I'm very, very happy because in the live stream, I feel like I did my job. I managed to make you aware that although we are having a breakout on the 4 hour in the price, the RSI was still below the resistance of 52. And when that happens, it's a sign of warning because the momentum is diverging from the price action that is breaking out too early. And when we hit 100k, immediately the RSI started coming back down, staying below the resistance, and that was again putting people in fear that the trade was gonna fail. And I was quite happy to see actually that this dropped there, because we were calling for using discipline in this sort of setups and waiting for candle close, and you can see that that was worth considering because the 4 hour ended up closing below the resistance and the price was still above it, like saying, well, it could still happen, but it didn't, right? So after they trap all the longs, they just push back down. Now we have a candle on the lower end and it's coinciding with this 95.9, and I'm looking, is the price now going to trick the shorts, getting them in a position in here and then going back up? Well, you can never tell. But now we have a breakdown on the 4 hour. The candle is confirmed at midnight in 2 hours and a half. So we will have to see how we close on midnight, because maybe we do confirm this breakdown on the RSI 4 hour and we could be going for lower prices. On the daily, the picture continues to look ugly. 3 days in a row we go up to 99 to 100k. This one, notice that is slightly higher than the highs of the previous 2 days. It managed to get to 100 and 100, and now we are at 95.8, so almost about to do the lowest closing price of the week. So that is definitely tempting the shorts to enter in new shorts. Remember that the liquidity is now on the upside unless that the price has the balls to go to 88k, more than the price, the market maker, right? So if they are planning to go to 88, fair enough. You can sell from here, trap those longs and go to 88. But if they don't have what is needed to move the price at the moment, how much is that? 7.5k. If they cannot do that, it's not really worth going lower because there's not much liquidity there. We are in the lower end of the weekly, in this range in here, which is bearish, and we are on Friday, so we have just 2 days to reverse that. The CPR sees rejections against the pivot. That is not great. Let's say that the closing price on CME is gonna be around 96k. We are about to close if we haven't yet, and I wanted to show you a few more things. Yes, the big well explorer is closing at a ratio of 1. Perfect, symmetric right there. That doesn't necessarily mean that if we calculate all the inflows minus the outflows, we get a delta that is precisely 0 in this week. It's more like the stochastic doing its magic, and we've been here in this area and we started rolling over. So the effect of this could be just rolling over. I haven't seen a big sell moving from 100k to 95.8. I don't think they have executed the full power of having 70k inflows in the delta, which is my calculation from earlier. If they did, it should go a lot lower. So they still have that potential to dump the price bigger. It's just that there is no incentive in terms of liquidity unless you go to 88. We are in fear at 44. And what else I wanted to show you? Yes, these liquidity levels in here that are 95, that I presume that is why we came back down. I mentioned earlier in my update in the morning that this is a pretty attractive area to go if we wanna, even if we wanna go up, just pay a visit in here and then push up. And with this move down from 100 into 95, we have this new red there. So this is, an achievement in terms of trapping shorts and potentially making it easier to go higher. I'm gonna insist, unless the actual plan is to go to 88. If the plan is not to go to 88, just go there, have some fun, get to 94.8, and then let's go up, because that is where the real fun is. And that what I was showing you is the short term. If I show you the longer term, look how much fun there is here. From 111, 114 all the way to 126. But we can get to 128 and still enjoy it. Liquidation levels of the past 30 days, we have the highest at 100k. That is thanks to this new visit to 100k in the fake move with a breakout during the event. 106 and 109.5, and I think that's it, guys. We have now some interest in buying, but it's so mild. It's 14, just 14. I start getting out of bed and doing something about it if we go beyond 20, beyond 30. This is the bid versus ask ratio orders, limit orders in the exchange, calculated as you add them all together and you get an oscillator out of it. Funding rates, all good, nothing that can give us an alpha in here. We still have tons of longs. The longs keep insisting, and we are extremely flat in terms of delta. That means that we don't have an alpha from this. When we have something balanced too high into the green, we say that we can use this to exit. If it's too low in the red, like in this area in here, let's say 800k down, then it's great alpha to take longs. The opposite. The order book is all paved with shorts starting from 102 then to 110. So in all this buying that there's been in here, the responsibles for the move to 100k were the smaller wallets. That's why they failed. They need the support of the purple ones, ideally, or the browns to do something. But if the move is just led by orange, we stay away from it, because these people are losers, right? So they're playing with no offense, Sometimes I take trades of $1,000 and I'm part of them. Not that I'm a loser, but 100 to 1K typically as a mass are the people that make the most mistakes and they get liquidated and they keep losing their cash. And the people with 100K to 1 million, they are there because, they get it right. It's kind of a self-fulfilled prophecy. I think I'm gonna cut it here. It's supposed to be a short, but I don't care. How long is this? 12 minutes. Well, it is what it is, guys. If you can watch it, good for you. Some days I'm gonna do it shorter and I'm just gonna talk about the RSI, but I wanted to give you a bit more in-depth information. See you tomorrow. Hit the like, write down a comment, and I'll keep doing these videos always, forever. You have my word. See you tomorrow. Bye bye.